Okay, we'll start. Just want to, I'll probably take about an hour on it just to share with you some of the macro trends that we have seen. These trends have been on our mind for, I think, for the past 2 months, 1 month plus 2 months. So we were thinking about how we wanted to share with you the trends that we are seeing that's coming up. So we also went ahead to go and meet some of the key people in the industry. Like you, if you've seen Facebook, I've met up with the UOB economist, Francis, just to be aligned with the trends that we see and see whether is it the same as how they are looking at the market. So after we got confirmation that we are all aligned in the direction of how the market is going to turn out, that's when we became confident to share with you some of the markers that we saw. Okay, so before I start off with the new direction for the next quarter, right? Let's review the last direction. I mean, the last direction probably a bit separated from because we just came on board. So the last direction that I gave to our guys previously was to build and power up their listings. That was one of the direction we gave because we know that people will start to sell even faster than how they were doing before, which is why we see a peak in the number of sales. So of course, the previous direction that we gave, we were telling our agents to build at a fast part on open listing. Then again, I think this industry is like a maze. When we point towards a direction of where the end point is, some people, when they walk towards an obstacle, they will then stand still and not. After 6 months later, I come back, I still find the person at the same area. But there are some people that after 6 months later, we realize they have reached the end point already. So one example that I gave was to build 20 sale listings and 8 rental listings within a month. That was the last direction I gave. And I had about 4 or 5 people coming up to me and tell me that, hey, Ken, open listings, very hard to build. I message the owners, I cannot get anything. I call FSBO, FRBO, I don't even get a response from them and everything. But then I have one person that came up to me and told me, hey Ken, thanks for the direction. Within about 2 weeks, this person built up 60 listings. 60 listings, within 2 weeks, did 2 rentals that probably gave him, I think, more than 15, 16,000 commission. And when I met him, he showed me his phone and said that I have another 15 unread messages. And these 15 unread messages are listings that I have no time to put up on my Property Guru. So you see, that this is the one same direction given to all the same people. But when you walk through a maze, there are some people who will see the obstacle and they stop there. So I went ahead and asked him, how do you manage to do it? But it's a very simple thing that I think we all know. The easy way out, agents will always do is just to text out and say that, hey, I know that you have a listing, can I market for you, and get rejected along the way. So this guy realized that he faced the same problem. What he did was to go one step further ahead, which we always do. So I don't know why some agents are not doing it. Just to tell him that I have a buyer that's particularly looking at this development, try to make arrangement and then get cancelled a few times. And after that, say that and went into a conversation. So a relationship was already built. And that was how he managed to get every single listing that he built up. 2 weeks to build up 60 listings, I thought it was quite amazing. And immediately we got a treat. So that's something that I want to share, that whatever direction that we give, it will not be 100% foolproof, but however you want to execute it better than other people will be dependent on how you want to maneuver your way around the maze. Some people give up along the way, some people don't, right? So let's move into the new direction. I hope that this will settle the mindset of how you want to run things in future. Okay, so before, where is the market really pointing towards? There are a few markers that we look into. One of the part is the bigger macroeconomy factors. So when we talk about market pointing, we are talking about how the market will be coming. We are reading all the way to about maybe mid of 2019, maybe about 6 to 9 months from today. We want to see how the market is pointing. This is one big issue that is going on in the macroeconomic factor. And we know that the 2 big powers, the bigger one is definitely the one more influential in today's market in every single economy in the world is probably in China. If this trade war continues, I mean, we have read through the timeline. The timeline of the trade war is is quite scary. They have already went on tariffs of about crossing hundreds and billions of dollars on tariffs already. And they have only just started. Even though a few years ago, they started hinting, debating, but the real specific tariffs on each individual country products have already started. Of course, there are people who say that this will in turn benefit Singapore, because in order to avoid tariffs, people may start up business in Singapore and then they start to heat out again. But before these things happen in the long term, during the interim process, when the trade war is going to happen, there's a very big hit that will come into the market. Is a very direct impact that will be hitting us because of confidence level. So of course, this is just some things I took out from the slide to show you how big this entire thing is and what timeline are we looking at in terms of the trade war. So this one has already seen some spin-off effect on the market by itself already. So there's one big macroeconomic factor we're looking at. You all know about this, right? Yeah, so some people are saying that this will end off, but then of course, with the pride and the ego that's going on between two leaders, I don't think this thing will end off easily. And this is something that the economists in Singapore are actually taking very big cues on. They're looking at this very largely because this will affect the market on a very big scale. Okay, so this is one cue that we're taking. We look at another cue. Before I've taken away 2 slides. We also want to take hints and cues from some of the well, how do I say it? Well, a bit hard to say, son. Okay, never mind, I skip that first. We take cue from the big boys first. Okay, so that one of it is the regional global effect. This one is the part where, you don't know what I'm talking about on this one? Humpty Dumpty had a great fall. And then I think all the king horses and all the king's men couldn't put Humpty Dumpty together again. And this is big. This is what I'm talking about. The shares and stock counters around globally has already taken a big hit in every single counter. So what we are seeing is that the stock counters have already taken a big hit of drop of about 30 to 40% within a week. And when we see such signs that are showing, you also realize that these are not your commoners who are playing and selling their stocks. When you have a 30%, 40% drop in a week, you know there are big players, the manipulators in stocks that are letting go big time. So of course you see a small recovery coming back because retail investors will probably see that there's a value to go in, they go in again, they heat it up, and then the whole thing will crumble again. And this is what we are seeing is huge. All these news are all taken on recent news. And if you see all these things that are coming up, you know where the direction we are pointing towards. We know that the market is going to probably have a hit coming back into the mid of 2019 or probably into 2020. That's what we estimated. And we spoke to the economists, they're using very, very generalized words that is not so scary. So his exact words were, we are being very cautious about 2019 coming into 2020. If we are investors, we are looking this at a different point of view, because as investors ourselves, we'll probably be scared. We'll probably be holding back and we probably not know what to do. But as realtors, what we want to do is we read these signs, and to us, every time through some crisis or changes in the market, we always manage to find some opportunities if we react correctly or if we react fast enough to see how the market will move. So we are reading these markers not to scare you. We are reading these markers just to tell you what should we be doing in the next 6 months to come. Understand? So I also want to say that even if we don't read correctly, if the market doesn't turn out that way, trade war is soft, you see your stock counters coming out, everything, you don't lose along the way, because everything that we do will still benefit you, because you will see what the direction is coming up. So I just want you to bear in mind, don't be scared now and think that I'm in a bad trade or something. No, you are not. So you separate your mind from an investor point of view and separate your mind as a realtor. Myself, what am I doing? I'm also starting to sell my properties already. I am. As an investor, I'm selling because I think now is a good time to let go before the market start to go down. But as a realtor, I'm also looking in the next, what's the knee-jerk reaction that will happen from investors first in the market? And then as a realtor, how I react accordingly. So it's a different point of view altogether. Okay, so we continue. So this is on the big boys. We look at the region now. What is happening in the region? Okay, the South China Post, Morning Post, South China Morning Post, yeah? Yeah, SCMP. So what you can see is that in Hong Kong, they already started to react in terms of drop of property prices already. And you see, in a region, you saw that Hong Kong has gone up to a crazy level in terms of property prices, right? They have already seen a big hit of recent, I think last week, we are seeing properties in Hong Kong dropping their prices by about 10 to 20%. And that is a very huge sign of slowdown in the economy, especially in the area. And they are largely affected by, the worst thing is they are largely affected by both countries. They are largely affected by US, and they're also the neighbor of China. So, and they're part of China. So we have already seen a very big tippling down in prices in Hong Kong side. And of course, if I take this and I tail it back into local, there's one thing you will probably see is that in an area that is so volatile in prices, they will always be the first to climb. And if they are first to climb, you'll always be the first to come down also, right? If I take this and pull it back into our local microeconomy, you'll probably be linking them to what? Your luxury sector, right? During all this while after the ABSD of 2013, for the past 4 years, you saw luxury sector climb from about 2,000 plus per square foot, hitting all the way up to maybe 3,000 plus, coming close to 4,000 soon already. Right? If you look at Nassim, has already been hitting your 3,736 per square foot mark, and they have climbed on a very steep curve over the past 1.5 years. Are they going to come down the fastest? We don't know. But these are signs that if we can catch it properly, you'll probably see people sitting on very huge profit margin be the first to react in terms of dropping on price. It doesn't mean that this 10 to 20% drop in Hong Kong prices, it doesn't mean that they are making a loss. It can be reducing their profit after a huge climb, they can drop it back. And that's the natural reaction. That's the equilibrium of a market. If I climb fast, I got big buffer, I can drop fast also. You get me? So that's something we want to be seeing. So new territories is one of the biggest area that has been hit in Hong Kong. We look at the next one. This is in China. So of course in China, this Rui Island on Hainan has been a boom for the past few years, whereby government has been encouraging hundred thousands of developers coming in to build with a lot of grants and everything that's happening. And of course, now they are bracing one very huge impact. And this impact can impact about 100,000 developers inside there. And a lot of the buildings may go uncompleted if this thing happens. So these are the news that have came out over the past 1 week. 1 week, 2 weeks plus, and it will continue. Okay, so what we have seen so far, we take cues from the global side, right, on the war that's happening. Of course, we can go on further to talk about Turkey and Argentina going to debts and everything, but I don't think they have impact on us a lot. So we are talking about other things. After we talk about the global, then we talk about the stock counters, which are very huge sign. The stock counters we are looking at are not only in our industry, it's all across. In your tech area and everywhere, it's all dropping. Okay, and then of course, regionally, in terms of properties, you are seeing some signs of coming down already. I think Singapore will probably be the last to react because if you have seen some of the charts I shown before, property price index of the whole region in Asia, right, has always been an upward climb, and in Singapore, there has always been a downward climb on PPI because of our government policies. So even though we are on a downward climb, we are still increasing on the price. So they will probably react first. We can take cue from them, and then we react accordingly. So that's something that is good to look at, and that's how protected we are. You're staring at me with blank faces. You understand what I'm talking about? You understand? Okay. So this is one of the most important ones. Okay, so I'm scaling down. I'm taking cues from big to the small ones. Central bank is one very important thing that we are looking at. And the first thing that we saw was your LTV. During the 5th of July, you know, our big news of the cooling measures that came in, right? A lot of the people in the market saw it as a cooling measure to prevent property prices from increasing. But of course, that is on your ABSD portion, right? We are looking on another side when we are talking about this topic. I'm looking on the LTV portion. Of course, everybody is saying that it's very premature for the government to react so fast when we only saw about a good 7-8 months climb in property prices. There was a turn back on our prices, right? About 7-8 months, immediately they slam us with one big news. People say it's premature. Now it becomes a lot clearer to us. We also thought it was very premature for the government to react so fast before the prices even hit maturity. But then now it become a lot clearer. That's how fast our central bank can be reading trends. So you see, if they didn't do it previously, and now that the thing is happening, it may be not timely already. So when we look at LTV, okay, so let's look at this. This is a summary of how the ABSD and everything's are running, right? But then if you look at the LTV portion, you know that we have dropped our loan to value from 80% to 75% maximum, correct? So what is this 5% drop? People in the market say that it's market prudent, is financial prudence to not let people over leverage. But if you look at this thing, I think what I'm reading, okay, all these are personal views. I may be wrong, but personal view, what I saw in this is that when the market start to drop, we are not afraid that prices drop too much or anything. The biggest, scariest thing that can happen is for banks to do a margin call on loans. And when they do a margin call on loans, your commoners will all be affected because your valuation will drop. Once your valuation drop, okay, so how they do a margin call? In layman term, if today I am borrowing, say I over leverage on 80% of 1 million, and in the next maybe 2 months, my valuation crumble and drop to say just 800,000. My 80% of my 800,000 will no longer be the same as my 80% of my 1 million, right? So then there's a difference there, and that's where the bank will call a margin call on you, and you have to top up with cash. And when you have to top up with cash and you cannot fork out cash, what will happen? You will force sell your property. And when you force sell, transactions are all hit in, your valuation will drop across the entire market. And that's a very scary thing. So what I saw in this minus 5% was a buffer to prevent margin call. Meaning to say, if I'm a central bank and I expect the property prices in the next few months to drop by about 10%, because it's not going to happen now, I hit it out early. By the time you have cleared your loan a bit, it will not be at the full 80%, right? So now I buffer the entire market by a 5% drop in valuation. My margin call, even if it happens, it will not be huge. All right. And what about those that have taken 80% loan last time? Not to worry, because you have been drawing down your loan all this while already, right? So your margin call will not be huge also. So that's what we are seeing. Market prudence, yes. Margin call prevention, buffering the market, probably a bigger thing, because if you tie back to all the queues and the counters that we see, right, and the markers that we see, it is probably true that they have been doing it a bit earlier to cushion the market a bit. Okay, so we look at the next one. Do you see this? Recently, this is already not updated. After I did this slide last week, immediately on the same day, I received a news from UOB saying that your completed project interest rates has gone up to about 2.4 to 2.5 on the average. We have been enjoying good rates of completed projects, 1.4, 1.5, maybe 1.6, 1.7 for a good many years already. And then the interest rate just climbed up very steeply now, extremely steeply. And this is for your completed resale. Go and check your latest message from UOB or some of the banks, right? Really, we are averaging about 2.4, 2.5, depending on whether you're taking a fixed rate or not. So I had a friend, quite big figure in the industry, so took a loan about, I think, a year and a half back, or a year back, wanted to take a SIBOR floating rate. The wife, who used to be a banker, told him, take your fixed rate. He didn't believe, because she was taking at about, I think, 1.8 or 1.9 that time, where his floating was about 1.4, 1.5. And now he turned back, he told his wife, say, wow, you made a good decision. That's how they read things, okay? So this is one thing. And what does it mean by rising interest rate? Rising interest rate, okay, we look at the next one first. When you rise on lending rates, you will also increase in fixed D rates, because they want to keep cash inside. My mom has been monitoring the fixed D rate like people monitor the stock market, because to her, fixed D is very important. So all this while, she told me, say, Maybank got senior citizen rates giving what, 1.4% for 3 years lock-in. I keep telling her that your 1.4 is nothing. Your 3 years you throw in, you are just wasting your money inside. I say, you give me the money, I go invest in something else better. But then today, the fixed D has gone up to be super, super attractive. And recently, yesterday, I just went to UOB branch again. I received this message, this email from UOB. They're offering 1.88 fixed D for 13 months tenure. Very short investment, very high interest rate. And your CIMB is offering 12 months for 1.9%. Have you seen fixed D gone up so much before? If you are looking at the previous fixed D, we are looking at about 1.1%, and that is almost coming close to doubling in interest rates already. So these two things shows you what? The bank is reducing their borrowing, they're preventing people from borrowing too much, they are taking in cash into the banks. So central bank is keeping a lot of cash. And if you read this, that's why I said this is one of the biggest signs that we are reading. And this is important because when the bank do this, later I'll show you a cycle. When the bank do this, what does it, where do we stand in the property cycle or business cycle? So this thing is, I would say that there are a lot of things that in this industry, not in this, probably in the realtor side, this whole thing is still very political. And the whole thing all take cues from how the government want to move. And they always read the market at least a year ahead or 2 years ahead. And they plan things along the way, right? So for example, on the 5th of July, this one only take notes. 5th of July, we had a launch, right? You all know 4th July, there was one developer that launched. Marina One launched on 4th July, and that was a Wednesday, right? So these are some signs that when you see such things, these are not things that we are saying that is a game political, no, but we are taking cues to see how the thing is reacting from bigger boys, from our Akong, and then we want to react according to market. We are trying to feel it with our feelers. If we are going to be oblivious to all these things, then I think we will just see the market go past without capitalizing on the whole thing. He's from PAP, he's walking out already. Yeah. Okay, so another thing that we saw, valuation of properties. They all recently, those who are running resale, they all check your valuation. We saw one of the properties about 2 months back, valuation was at 1.2 plus. Cannot remember the exact figure. Today when we checked, that's last week when we checked, all banks value that property at 1.1 million now. And it's weird because there are no transacted prices to cause a drop in valuation. It is just a drop in valuation across the banks, across the valuers. So if you realize this, maybe you all can tie in better because you are more on the ground, you are doing your property. Valuation of properties are starting to fall, not because of transacted prices, but because of what the banks want the value to be. Again, this is margin call prevention, right? I already dropped your LTV. Now, from now on, any borrowing that you want to do, I will not give you too bullish valuation. I will go back to a fair value or maybe slightly below fair value so that when you borrow, it will not be too over leveraged. So valuation has already fallen. I don't know how many of you have seen it. I have spoken to a few agents. Some of them have already told us already that it has fallen. So these are the things that we are looking at. So from big to small cues, let's look at the cycle. So I took this business cycle from UOB also. Francis shared with me quite some time back. And of course, they say that business cycles are always not the same. They are not always the same, but they always rhyme. That's what he liked to say. Meaning to say, they always follow the same trend. Really, what goes up really will come down in a business cycle. If it doesn't, then there's something wrong because the whole country cannot be lived in already. Okay? So, of course, in a business cycle, if you look at this part, this is, initially there was a period of time in the past 4 years, 2013 to 16, about 16. 2013 to 16, we are in this stage. We were in this stage. We were really in this stage that time. That was Singapore. Remember, we were in this stage, and in 2017, we saw an upturn in pricing, and we thought we had a good few years to climb before we go down again, right? So that time, that was the bullish market where all the developers came in, bid for lands, everything, because we were really in this market. We were seeing a down of PPI price index for 4 years until 2017. I remember the first quarter, finally we see a turn up, and then we were climbing up. So during the past few seminars I was giving to buyers, we were telling them, hey, we're in this area. If you don't buy now, what will happen? The prices will go up and you'll miss all the appreciation already. But then I forgot to see one thing. I forgot to see that it was only Singapore that was in this stage. The whole world was probably at this stage already. The whole world is really at this stage. So if we see, if the whole world is at this stage and we are looking at Singapore, what happened is that initially we thought we had this, but then when the government threw in your cooling measure, they pushed us up a bit to here. And now with the global economy thing that is happening that's impacting the market, suddenly we are pushed up to here already. Yeah. So you see, that means what we are seeing is that we were probably having a good run because the government has already secured us. But the global factors are a lot larger that will probably push us back to where they were, but we will be cushioned a bit more. There's no way we can avoid, because the business cycle, now I start to realize that the business cycle, when we look at our own, we want to look at the global business cycle, so where they are. And why I say we are here, okay? Because if you look at your fiscal and monetary tightening of what the MAS is doing, it's already on the late portion already, right? Initially, there was stimulus all this while. Remember? When we had a 1.1% interest rate, it was a stimulus because we were at this stage, correct? We were pushing for people to borrow money, to invest more so that there's multiplier effect, everything. And then after that, it slows because it increased a bit more. Suddenly now they tighten big time in a very short period of time. And if this cycle is true and we are here, then very soon we'll probably see something happening along this way. And this is where Hong Kong is now already. They have reacted faster already, right? That's where Hong Kong is, that's where China is, that's where a lot of the countries are falling into. Okay, so what is next? Let's look at the next thing. So you see, everybody always talk about the 10-year cycle. The 10 years thing, I think everybody say until it becomes a curse. This 10 years thing is really, so what is the first 10 year that we see? In this slide, you saw our first big crisis was when? 2008. That was Asian financial crisis. It started in 07, 06, and then it hit all the way down 08. Where's 08? 08 is here. 1998, sorry. 1998. 1998, there was an Asian financial crisis. And then, of course, we had a dot-com, that one we leave out. 10 years later is your Lehman Brothers. That was in 08. So 1998 was your Asian financial crisis. And then you hit all the way to the period is always about that 3 years. 07, 08, 1997, 98, then 07, 08. So when I saw this global financial crisis, that is your subprime, your Lehman Brothers. Remember that period? Singapore was only affected for about a year plus. We shoot back up already. So I went to ask the economist. I asked him, I said, hey, I don't see 2007 or 08 as a crisis. I say, because it was a very short period, Singapore was not affected. He said, you are wrong. He said, actually, we were affected big time. But the government pumped in billions of dollars to save the economy that a lot of the commoners do not know. Some of you all know, I also didn't know. The economist told me that the billions of dollars that were pumped in during this period of time to draw, a lot of grants were given out to businesses to draw all the business to come into Singapore to stimulate the market again. If they didn't do this to save the market, we would have been gone for a longer period of time. So that is what they have been doing behind the back. So then, of course, 10 years, now is the thing again, the 1.8. Is this a trend that we are seeing? But it seems like it, right? I always don't believe in that 10 years trend. But when we talk to the economists, they say somehow or another it will happen. So it's either 18, 19, 2020, is pointing towards that direction, because I think no matter how strong we protect, the bigger economy that's outside is in a big war mess now. It is. So this is the cycle we are looking at. And of course, if you look at our PPI, if you look at our property price index in our cycle, it's time for us to come back down a bit already before we heat up again. But it's good, because if we don't do that, I can tell you the market is going to be stagnant for all of us to play. Really, there's nothing for you to sell because the prices don't match. Your resale and your new launch prices have just gone too far apart. And I'm always happy to see such things happening. Really, I was very afraid of a very long period of time of your 13, 14, 15, where we waited very long. But if now that the market is going to heat out a lot faster, react a lot faster, at least it means more opportunity. Not just that now we are learning to read. We are improving ourselves. Last time we were reading market ahead for maybe when it happens, then we start reading. Right now we are trying to read, but it's always a gamble for you to hold a training before something happens. So then that's why I had a lot of disclaimer at the start. Okay. So when will it happen? Okay, we saw it after Chinese New Year, we think that you probably see some of the news coming out after Chinese New Year. Economists think that mid-2019, you will start to see signs happening. The biggest impact should happen in 2020. So they're reading a bit further. Okay, so then what will happen to our industry? So I was thinking for the past few weeks, if we know that the market will not suddenly come out with a news and tell you, say, recession now, then the whole market drop. You went, right? So, so what will happen is we will start to see all these news that will come out, right? Your interest and all these things. So people who are reading the market will probably already start taking cues already, right? So if this becomes a bit more common, MAS come out with warnings and stuff a bit more. They have came out with probably 9 warnings across the past 1.5 years. And they have hinted us a lot already. Just that we don't piece them together. That's when Evernote comes into good play by Tony. If you go into Evernote and you go and search MAS keyword, you will see all the news that comes out from MAS, right? You will have a very good overview, a very good glance that if you look at all the news, the warnings are all there. For the past 9 articles or 9 news that came out over the past 1.5 years, the warnings were really all there. MAS have hinted us already. So what will happen to our industry? If the news continue to feed like that slowly, we will always think that, oh, okay, so what is going to happen next? Soon will be a buyer's market. We will think that soon it will be a buyer's market because sellers will all let go. But before it becomes a buyer's market, the knee-jerk reaction that we feel will definitely be selling first. Sellers, when they read these signs, they will let go first. Like how I reacted, because I am also letting go of the properties, right? I want to keep cash now. I want to keep cash. So same thing as your stocks and shares. What did the big boys do? They sell first, and then they keep cash. Similarly, to a lot of government bodies, I cannot say where I heard from, but we also know insider GIC and some of the government bodies are also selling assets. So the first knee-jerk reaction will be to sell. The big boys have already reacted by selling. Very soon, you will see the commoners start to sell, right? So in the resale market, if we know that this is going to happen, we used to choose very proper price listings to hold on. If it's too high above your open listing in the market, we probably not want to take that listing, or we will not pay attention to. I'll tell you, why don't we take a gamble now? If we think that the market is going to be like that, and the knee-jerk reaction will definitely be from sellers to sell, then why don't spend your next 2-3 months now, before next year, before Chinese New Year, build as many listings as you can. Just build, regardless of where you go, whatever price you see, you build. You build so that you are in contact with these people. You give market cues along the way, you touch base with them. When they decide to drop their prices along the way, you are already in touch. And not wait for them to, hey, prices are dropping in the resale market, then I go and build. By the time, you may be a bit too late already. So that's the reason why the last direction we gave was to build and sell your listings up. So what if it doesn't happen? You still got your listings to sell. Just that it may not move that fast because the prices may be a bit high. Recently I'm getting a lot more calls from referrals that are wanting to sell their properties. And we are seeing their prices starting to fall a bit already. I had one property, somebody was asking for 1.7, they are now dropping to 1.6 plus already. So I heard some of the agents telling me the same thing also. So I feel on the resale market, regardless of which segment you are in, you need to build your listings. And you need to spend time just to accumulate it, to prepare for it to happen. We don't need for the full crunch to happen. We just need more news to keep coming up, which is going to happen. The news will sure come, right? Small bits and pieces, you will see people reacting. Similarly, as a seller myself, as we read this, I am also thinking of dropping some of the prices. Don't keep too much profit margin. I want to take back already, right? Some of the bigger boys out there in the market, big boys, really big boys that we know personally, so letting go of a lot of shares, stocks, and properties, urgently pushing off. So that is our first knee-jerk reaction. Then what about projects? What about your new launches? You know, this market, a lot of what would I say? A lot of people would like to. They are very, over the past 1.5 years. I think we are all tuned in to look at brand new launches. Once, like for example, Whistler Grand start, Park at Star start, everybody will chung to that projects. That is something that is very good
for agents nowadays to take it as a bait, because it's something fresh in the market, take it as a bait, attract buyers to come in. So I wouldn't say you should stop working on it. You should continue to work on it, right? But while you're waiting for these new launches to come, you need to start working on projects, existing projects that have already been launched about half a year to 1 year ago. Okay, why? Because if the knee-jerk reaction is to sell, and the big boys are also reading this, if it really happens, what will happen to new launches? Drop in price, increase in comp, right? The time has come back to a drop in price, increase in comp. And what are the few things we want to be looking at? Number one, projects with buffer from the land price. That means they have increased price along the way. They are sitting on big profit margin one. They can afford to drop if it happens, right? Can afford to increase comp. New one, I talk about latest super new one, margin getting smaller and smaller, right? Because the land prices are higher over there, right? But don't stop, because agent very unilateral, and I say something, you all just listen. I want you to understand, I'm not saying you stop. You still use it to work on it, because that is still attractive for leads to come in. Okay, your buyers will still come in. But the existing ones cannot be neglected. It cannot be neglected, because if the normal sellers will sell, the big boys as developers, they will also let go. Those who have done Highline before, which is just here, Highline, there was a period of time, capital increased comp to 7% to agents, right? 7%. And that was a dream for a lot of people to start selling. But the dream always happened too late, because when you see 7%, wow, I start to do my campaign, I start to call people, you want to buy Highline or you want to buy Highline, the property grew all back Highline. By the time you finish the campaign start to react, Highline fully sold. You get me? So let's learn from the past mistake. If you know that this may happen, that the comp may start to increase and prices may start to fall a bit, then why don't choose correct projects and start building your database now? Because as you build your database, along the way you get to sell. Okay, if you don't get to sell, you accumulate database whereby if there's a new promotion or new package or knee-jerk reaction that happens, you have database to send out to and not start reacting from then. So I will feel that a lot of people will probably use this last quarter in the next 3 months to go on holiday and say market is going to slow down, we will not do anything. There's no wrong. We are all going for holidays, right? But along the way, while you are still in Singapore, that spare time that you have, why don't aggressively go and build up either your listings in your resale market, your landed, actually very good to build also, because landed prices have climbed up quite a high bit also. And we don't know if the knee-jerk reaction comes, because these people who are richer usually will react faster. And they have their private bankers, they are reading the counters, they are reading business times and everything, right? So build out listings. For new launches, build out your database. Which are the few projects that we are looking at? Affinity Riverfront is definitely a good 2 projects to look at, because they have the track record of drop 10, increase 10% comp. They did that in US. They did that, and they are always very fast to react. I can tell you, you can see them reacting already. The commission has already gone up to a high level already. So, and some other projects that are under radar are projects that y'all can be looking at also. Really, like Bukit 828 is a good project to look at, and it's a very low radar. It's still high commission. Addition, all these are all under radar, and nobody is fighting on that arena. So these are things you want to look at. Okay, so what if it doesn't happen? So like I mentioned, if it doesn't happen, you don't die. You will still be making money. It's supposed to be done that way. I'm just asking you to do it, step your accelerator now, accumulate, because when it happens, your competition will come in. I want you to build it up now as much as you can. Okay? So y'all got the 2 things clearly. Are we doing it ourselves? We are running a lot of campaigns nowadays. We are running a lot of campaigns ourselves now. Okay, so yeah. So we are running a lot of campaigns now. We are building a lot of listings ourselves now. And that's what
a very clear, precise direction, but a very simple one to let you know that it's not going to harm you. But if you catch it right, if the trend falls along that way, you will probably hit a lot faster than the rest of the agents out there who doesn't know that this is happening yet. I can tell you it is true. You know why? Because this one is the next slide one. We talk about this first. So of course, before that, I also talk about your upcoming trend for the next 6 months. Other than building your listings, there will be a knee-jerk reaction from both developers and sellers. You want to build your database for projects that have margin and that will increase com high one. You need to be prepared for it. There's another one, UI guidelines. Remember the last one I told you that there will be a trend of an increase in search for 1 bedrooms and small 2 bedrooms. You all saw the recent news article from Orange Tea. It was in line. After we said that, it was true. This thing will always happen. Buyers will read according to news. And that's how easy to read Singapore market. It's really unlike other countries because we are so small. And we always listen to Akong. News come up, everybody react. It's a herd instinct, really. So when we shared this UIA guideline, I think we hope that to hear more testimonials from you all that you all have closed because you all push the buyer, not push the buyer, you inform the buyer that this is the trend coming up. Because we had one testimonial from Yan Xiu already. She just sold Affinity 1 plus study. 1 plus study. And the buyer didn't want to commit in the first place. The buyer didn't want to buy so soon. You want to wait until next year and see how the market and everything. But she shared with the buyer the UIA guideline, telling him that, or her, that in future there may not be 1 bedrooms. Prices may start to increase. You all saw that the prices increased already in rear front. Oxley increased prices for 1 bedroom and 2 bedrooms. Did they increase for the larger units? I think never, right? So you see, our trend reading has been correct, but it's too fast. I hope it will last a bit longer. 2 trends we saw: increase in search of 1 and 2 bedrooms in the market, which OT came out with a news article. Second trend we saw that we said once the search increase, sales increase, prices will increase, right? Which happened in rear front immediately. 1 and 2 bedroom increased by 1%. Okay, which is still very small. You will see bigger increment one. Okay, so when Yan Xiu used the slides to share with the buyer immediately committed within a week. After talking to the buyer, 1 week later, purchased the 1 plus study. That's how good it is. And I think he would thank her now because after purchasing, he will probably see, the other side, rear front already increased in price. What you are saying is true. So that's something that we want you all to listen already. Don't just listen. What goes in must come out, right? So once you listen, you absorb already, you also need to let out one. Go and tell buyers, talk to them, or do something about it. If you keep all the information inside, you will have constipation. Really, some of you listen, wow, very excited, must do, but never do. So same thing. We are also doing a seminar this Saturday, which we sent a few conflicting messages. Yesterday we wanted to push it back because the runway was too short. But last night after we sent out the message, we had so many appeals from agents that they have buyers who already signed up. So now we have sent out another message by 12 p.m. for you to revert. Only with buyers revert. I don't blow up the whole figure. I come here, talk, then I only see 2% sitting here. We are conducting a seminar on Saturday on the guidelines to let your buyers who are sitting on the fence know that they should buy 1 and 2 bedrooms now. They must buy. And now we have trends to prove to them from the news articles and everything. And other than that, we are getting the project ICs who have stock of the 1 and 2 bedrooms compact to set up their booths here so that your buyers can go there and shop and see what they want to buy. Okay, your taggers will be here, meaning to say your buyers will see, nobody will co-broke with you and you will still stand with your buyer. The taggers will help you for free if they can close it. You understand? So we are doing all these things. Even for resale market, if your buyers in a resale market, okay, because we don't know how people react according to information. Okay, if you have your resale clients who are very in tune or always want to listen to trends and everything, invite them in. Because they may not have the intention to buy in the first place, but after hearing that, they may expect cash and say, hey, let's go and buy 1 bedroom. So just invite them without a pretext telling them that you should buy or anything. Just say, hey, you know the URA latest guideline is going to change the whole landscape of how Singapore is going to build those compact units. I think it's worthwhile to come and spend maybe an hour plus to come and listen. You may grab something along the way because we are doing the closing for you. So let us know if you have buyers that are coming in. We got limited space. Okay, so that is one.
recall business cycles. This one, because 1617, I wasn't with y'all. I only came in like 18, and so my cycle belongs to the project cycle. And so resale side, I really don't know much to talk about. I not well versed. Okay, so what I wanted to tell was in project trend, what we saw was in 1617 was the period of time where everybody made the most money. Everybody was hitting the 1 million mark in 17. A lot of millionaires came out. And that's why is that a reason? It's because it was accumulated. Let me recap the trend with you all. 13 to 15 was a down period for Singapore, right? That was the time where developers have no choice but to increase commission for agents to start selling for them. Right? They drop prices, they increase com. That's why when there was an accumulated stock, 1617, people made a lot of money. Because why? Your Alex residences, sell one is 90,000, 100,000. Your Highline residences, we already say your New West, all this, all happened during your 1617, right? And then after that, what happened? The com was so good, the market was recovering, it was the perfect combination, the stock all cleared. Really all cleared. Cleared so much until there's only left with new launches only. Then all the developers start to build up their land bank again. Because why? They cleared their stock already, right? So 18, you saw a flurry of all the lands coming up. And then suddenly no high com. Start of 18, don't have both. Don't have high com. They only have low com new launches. Then everybody went to where? Everybody went to do high end. Because high end was still where the high com is. My high end still got stock that time, right? So everybody do high end. And then it seems like you're in 18, you're all forgotten the past trend in 1617. I'm here to remind you all again. Look back, because the easy to sell mass market high com has already formed up in the market at the back. While you are focusing at the front of the new ones, all right, while you are focusing at the front, while you are focusing at the front, right, of the new ones and the high end one you have been looking at, look back. The accumulation similar of what we saw in 1617 has already formed up, and it will continue to form into 19. So don't get distracted and run the wrong way. Repeat your formula, your success formula. Repeat it again. You know how unlucky some of the agents who join us late. They missed this boat. They missed the million boat. Really, there was every deal we made is only that what $3,000 to $5,000. Last time every deal made is 70 to 100,000. Wow, coming back already. It's back. So look, remember your past cycles. This one I mentioned, right? New and existing launches. Okay, so I have concluded my trend. Very short and sharp. I hope you all understand what I'm talking about. Before I go on to the motivational part, I just want to ask any of you have any questions or not? 3 trends: resale, build your listings, new launches, look back to where the high com is, the trend, the easy to sell, build your database inside there. You are spending lesser ad dollars to get more quality closings. Okay, the market will react. The knee-jerk reaction, sellers will go first. What will happen after that? We tell you again. Let us read a bit more. Okay, but the knee-jerk reaction is sellers will definitely go first. Because why? These are investors. Then the investors will come in after that when the prices are low again. So the first investors with inventory will let go first. They want to cut loss. And because valuation will drop. And not forgetting, your interest rate heat up, your installment is going to be extremely high. You all realize your installment damn high now? Xiong, really, your rental I think cannot cover your installment now already. And people will find it not worthwhile holding on to a rental unit now. Might as well sell it off already. You get what I mean? So that is the trend we saw. And of course, the URA portion of your 1 bedroom and the compact units. I can tell you, the market is not educated well enough on that. You need to keep pushing this message out, and it will help you. Okay, so these are 3 signs we saw. Questions? Okay, so Yen Xiu just asked, since the small units are increasing in prices, are the bigger units going to fall in price? Okay, so this for this thing to happen, I'm reading trends that are coming in together. The immediate reaction we saw was your 1 and 2 bedrooms that will increase in price. Your 3 and 4 will probably stay there. It will not drop first. It will not drop. Okay, but when the market hit after Chinese New Year and the news come up,
the first to drop will definitely be your large units one. So that's why I say you build your database, you will have home buyers who don't care about whether the market is dropping or not, but as long as they need the homes to stay, as long as they see there's a reaction from developer that prices are attractive, they'll go in already. They won't wait to time until bottom, right? So that's why building up your database is very important, because you will be able to react better. 1 and 2 may stay for quite some time, because people will still chong until really crunch already, they want to clear, they will probably drop it. So conclude that part, your first drop in prices will be your 3 and 4, the larger units. Then 1 and 2 will follow suit after that. So when 3 and 4 drop, the reaction will be faster, because investors will wait and time the market, homestayers won't. They see a good promotion, they will go in. Yeah. Yep.
Investors, they take a longer term view, like for 3 years, 5 years down the road, and now overall prices is going to drop.
Yep.
How do we get them to invest now?
No, which is why you remember the last time you asked me the same question. So what the question asked was investors who saw this trend on a longer term view, about 3 to 5 years, that the market is falling, they are not investing now. So the last time you asked me, I couldn't answer you. I told you that was very hard to change such a mindset. And the real reason is because he is reading the market correctly. So there's no way you can push him, because what comes out from your mouth or whatever reason we can give him will not be bigger than the news he's reading. So these are buyers you need to hold on to him. If he is the en bloc owner that you told me about, right? So you see, he doesn't even have a property on hand now already, right? Yeah. To be honest, if you want to talk about, you can use URA guideline to talk about a 1-bedroom investment. You can still use him to do on that. For homestay, I think you should be able to find a good value buy in the resale market. I don't think your project large unit now would suit him as much already. But you can use URA to counter on the 1-bedroom. But for large units, I think you probably really can find very good value buy in the resale market for 3 bedrooms, 4 bedrooms now. Huh. Hey, okay, so before we end off, can I just show you 2 videos and some graphics? Yeah.
This is the same thing they asked me basically. Should I do it now or should I do it 2 years down the line?
Okay, you see when I share with you this trend, okay. So the question, sorry, I need to repeat the question. The question asked by James was that he has a landed buyer who is asking him the same question: should they buy now or should they not? Because they are reading the same signs in the market. I mean, it's quite obvious. Okay, so you see, as a realtor, I want you all to always remember your objective as a realtor. Today, I am talking to you all as a trainer, right? I can tell your signs and tell you how to go according. As a realtor, I really hope you all don't go in to commit and read the market to owners and buyers like that. You know why? Because there's a very high chance if you miss and landed prices continue to go increase, they will blame you. So for me as a realtor, I will take a very neutral point of view. It's not that I'm making it sound very nice, but it's not that I'm hiding information from them. I'll tell them that, I will still tell them, because if they're buying for homestay, right? If they're buying for homestay, they are not going to sell within that 3 to 5 years. Whatever they purchase goes down, will come up. And when they come up, they'll go higher than the previous peak. So no matter what, they will still have a good value buy if you're for homestay. So homestay really no value, because, and no worry, because you are going to ride through the 10, 15, 20 years. Yes, and especially yours is a land. If they can go in, they will still ride through the whole thing. So, but I mean, you tell them what is your value in holding. Yeah, correct. You just wanted reassurance. I mean, some people will feel bad. They will feel bad like, hey, I know the market now. I should tell them that they shouldn't buy now. But I want to tell you that you shouldn't gamble for your client. It's their money. Yeah. Yeah. So, yeah, James, you probably know. So, yeah. Yeah. Yes. Yes. But I just want you all to know that so far our track record in Singapore, PPI has always been the same. Our peak is always higher than the previous peak. And that's how, because, okay, very simple. In layman term,
if you know Singapore will continue to grow as a country, our peak will always be higher than previous peak. If it doesn't increase, I'm talking about peak as in P-E-A-K, I'm not talking about zhu, not peak. So it will always be higher than the previous peak because we are growing as a country. If we are going to not pass the previous peak, means we are gone. We are gone. We are downsliding as a country. That's a layman term. So that's something you need to share with your buyer, letting them know that if you're buying for homestay, you really don't need to read the market too much. You can go and buy for long term, just buy already. I mean, that's speaking on a realtor point of view. Oh. Okay. Hey, sorry, I'm going to share 2 videos. It's in Mandarin, so I will translate later for whoever in Zoom, okay, that don't understand this part. It's a bit more motivational. I just want you to know, because a lot of people attend talks, but it doesn't change their life. I want you all to attend and do something about it.
人与人的3大差别，同样都是人，生下来都一样，为什么结果不一样？人跟人之间最大的差别，首先在于思维模式。高手和领袖是先相信，然后他就能看到，他先相信，他就能看到，就像马云一样，在99年创办阿里巴巴，他就看到了10年以后人们在网上买东西，是这样吗？他就看到了，相信看到。普通人的思考模式是什么？看到了，我才选择相信。我看到了，我才选择相信。但是当你看到的时候，这个机会可能就没了。但是更有失败者看到了都不相信。
Okay. So translate 3 types of human. One is they believe, they see, believe, then they see, then they do, right? So they haven't seen the thing happening. They start to think, they believe, and then they act on it. Okay, there's a second group of people who see already, then they believe, then they start doing something. And usually these people are a bit late in terms of achieving what they want in life, right? Now, of course, the third group is see already, also don't believe, don't do anything. So why are we sharing this is because if today you believe in some of the trends that we talk about and it convinces you, I need you all to start working on it. Because you may not be reading the market like that. That's our task. When we read the market like that, then, and you are given the privilege to read markets the same way we are reading, you need to start working on it. If not, every direction we give is all going to be the same to you, really. So I need you all to believe and start acting on it. That's why I told my guys, the 300 that came, because I saw something that I haven't even tested. I say, come, follow me. SI is good. We saw, we believed, we saw, we came. So they did the same thing. So I applauded them. I say, you all belong to the first group of human now already, because you all didn't see it happening. You all came along with us. But then now it's about work, right? Back to a micro level. Are you all going to wait until the thing happens? Oh yeah, Ken just said that. I think I start doing too late. So if you believe that we are reading correctly, I need you to start working. Every single training, every single thing you attend, you need to see and go already. Okay, don't sit on your asses lah. A lot of people like to procrastinate one. But then there's a second video. Let's look at the second video. It's still in Chinese. Okay, so this part is okay, so this story is about the journey to the west, right? You have the monkey god and everybody. So monkey god became a god because he's strong, and then of course his partners also became. Then of course there's this pig character, right? That he is lazy, womanizer, and yet he still became a god. So the story here is that why is he still a god even with such attributes is because he followed the right team. because the right team brought him along the way. So that's the story along the whole way. So are you in the right team? We are in the right team. We are in the right team because this is what I always tell people who wants to join us. And you know, I've been talking to probably cumulative 500 people across that 2 months already. And I realized that the thing about SRI now is that what we wanted to form up is starting to piece up very beautifully together, because today we have access to direct people who are experts in their own way. In all verticals of a company or this industry, you all are having direct access to these people, right? You have Tony, you have Tricia, you have Bruce, you have Benson, you have myself, and we are all good in our own different ways, and we are giving everything back. The problem about what the bigger agencies that we are seeing nowadays is that the focus of the companies are in a war zone. In terms of numbers, they are fighting. In terms of sales in projects, they are also fighting. These are the two main KPI that they're fighting. If you see on Facebook, you know already, right? So give awards, go to Eurosport, the Lamborghini ride and stuff like that. All these are all marketing techniques. I think in an agency, what we need is skill set, directions, and how we want to run. And you need direct access to these people who are there, because our job is to read the market. Doesn't mean we read better, but it simply means that while you are making sales there, we are not making sales. We are reading the market. We are reading the market for you all. So that's why I was telling some of the agents out there, right? The bigger ones focus when it's on there. I can tell you, none of them are reading the market like that. Really, they don't even have the time to read the market. They're probably thinking, where's my next convention going to be? How am I going to make it a bit more attractive to shout out to the world, to let people know? I asked Benson once before, I said, your technology is so strong here. How come you all don't even shout it out in the industry? So Benson replied me, you know, Benson is that cool guy who reply you with a matter of fact. He just said, our apps are done up not for recruitment, it's for our agents to use. If our agents think it's good, they will start to talk to people. So he's just in turn saying that OT are doing apps for recruitment. So that's how the whole thing is, and this culture is correct. That's why are you in the right team? We are. So even if you are 猪八戒, you also will make money. Okay. last part, then we end it. Okay. Mind of a master procrastinator. I took this slide from a TED Talk. You all know the TED Talk, right? And this is amazing, because I'm a procrastinator. I am. Who is not a procrastinator? We are all procrastinator, right? And we procrastinate a lot. And I always, because I know I'm a procrastinator, I always self-reflect how to stop myself from procrastinating. I really cannot. So if I'm giving this talk, you only see me doing my slides either in the morning at about 4 or 5 a.m. I will wake up just to rush through the slides, or I will only start doing it the night before at 12 a.m. I take about 6 hours, do the slide, no sleep, come down, we talk. So that is the problem about me. And I think that's the problem about a lot of people also. And Samana. Okay, so you see, that's the thing about me, and that's the thing about a lot of people. We don't do it until the last minute. And how do I solve this? I give myself deadlines. How do I give myself deadlines? For example, I wanted to give a direction talk. If I sit on it and I say I will do it only when I complete my slides, I will never do it. I will never do it. So what I do, I force myself. I will just tell Tony, Michelle, I'll say, hey, we set next Tuesday direction talk. Once I set that, I got no choice. I have a deadline, right? So I start working. I won't start working. I will start thinking about what to talk about until the last few hours. Then I start doing. Okay, so this is what goes through everybody's mind. And I always ask myself, how come some people can still procrastinate and not do anything in their entire life? It's like 30 years gone past already, still never do anything. And it's scary, you know. So I was reading this and I thought, oh, finally I understand the reason why. See, because this guy, he said that in our mind, right, there's a logical person. They will always tell us that it's time to work, it's time to do something, and that's the logical person. But in the mind, we always have a cheeky monkey. Right? The cheeky monkey is somebody who always tell you, you still have time, let's play now, it's more fun, don't waste time working and everything. And that's always in our mind. And there's only one way to stop it. It's the panic monster. And this is exactly what goes through my mind. The panic monster is the only thing that the cheeky monkey is afraid of in our mind. So when the panic monster appears, what will happen? The chicken monkey will run. Then the logical mind will start to work and do things. So that's why when I set the deadline, the panic monster will come in, right? So that's what happened. I didn't draw this, I took it from TED Talk. So this is very basic. So when you set your deadline, panic monster come in, chicken monkey runs, your work is done. But in life, a lot of things don't have deadline. That's the problem. And I realized it's not about why people are procrastinating for 30 years and not doing anything. It's because there's no deadline in life. There's no deadline. So if there's no deadline, your panic monster will never appear. Your chicken monkey will always be there. You'll always be going in, spending one whole day in JB, washing your car or pumping petrol. And then when you have things to do, the next day you'll say, hey, just wait lah. I mean, we can wait until next day to do. The project is always there, it won't sell out so fast. So then he drew this thing. You know what is this? These boxes, every box means 1 month of your life. 1 month of your life. And I couldn't squeeze in too much. And when I squeeze in all this, this will form up about 60 over years of your life. 60 over years. And can you see if your 60 years of life can fit into a screen? Do you know that you're running out of time already? You are. So you see, when I shade away, I'm 35. When I shade away, of course we can live. I'm not cursing everybody to die at 60. But I mean, we will probably work until 60 plus. Okay, the 70, 80, 90, I don't want to talk about it. That's for us to enjoy already. So if I talk about my working age and I carve away how much time have gone, I will be scared because I only left with these few boxes. And if I print this out big in my room, every month pass, I just shade it blue. Every month pass, I think I'll start to tear. Until this part, I cry already. Yeah, and that's life. I think since there's no deadline, then why don't we set deadline for ourselves? Because this thing will probably tell you how much time you have left. And I mean, there's no wrong. There's no wrong if today your blue box is at this part. There's no wrong. There's no wrong. Just embrace the thing and know that you probably have a good 5 months, 6 months, 1 year, 2 years, 3 years ahead. Then make the best out of this 1 year, 2 years, 3 years. Set the panic monster in and start working. Because after that, you want to work also cannot already. Things happen along the way. You don't have energy and everything. Then why not just make the best when you're still able? So this is the mind of a master procrastinator. We need to set deadlines. Small tasks you can set. Life you cannot set. Then let's scare ourselves every day. I'll probably start to shade the squares. Okay, so how many boxes have you left? And so with that, I hope you all can start working. Thank you. Hey, sorry, this one shouldn't be here. That was the old slide. Okay, thanks.